Over the past couple of years, we've had some very prolific investors, including the Big Short's Michael Burry and billionaire investor Jeremy Grantham, and both have been calling for one of the biggest stock market crashes in history. Now, like the boy who cried wolf, here we are deep into 2022, and tech stocks have now crashed, bonds have now crashed, crypto has crashed, and still both of them are saying that the worst is yet to come. Now, today is all about Harry Dent. Harry is a best-selling author. He received his MBA from Harvard, and now he heads up his own research firm, HS Dent Publishing. Now, it's no secret that Harry's also been calling for a big crash. In fact, he believes the S&P will be going down 86% from its highs, and the NASDAQ will see an eye-watering 92% decline. And obviously these are huge calls, so in this video we're going to see where he stands as of right now. And this includes, out of everything going on in the world right now, what is the number one problem we are all facing? Then why Harry believes the next big leg down in stocks will be coming very soon. And then we'll finish up with the place he believes is the very best investment right now, which will be outperforming everything else. As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, so first up, the global economy is in a mess right now. Here in the UK, we were days away from our pension system collapsing, which required central bank intervention. And now we have rumors of more major investment banks in trouble. So what is going on?
What really happened here is the central banks, even though they've been getting away with murder, stimulating, unprecedented, nonstop stimulus all the way back to early 2009, the markets haven't punished them for this, okay, particularly. But they went overboard in COVID, okay? As I've been saying, they panicked and $10 trillion, half of it fiscal, which is more inflationary, and half of it monetary. And so we do have serious inflation. And again, this inflation is entirely artificial for the first time due to stimulus, okay? My inflation indicator is the best in the world that I know of, and it says inflation should be more like 1%, as it has been coming into this. So this jump up to over 9% and now back to like 8.3-ish, that's the problem with the markets here. So again, the central banks and the Fed have been able to get away with murder, have not been punished by the market for endlessly printing money, but they are being punished now, okay? And so they are going to have to keep raising rates aggressively to get the stock market to come down more and to get the economy to slow. And again, what the markets are saying, they know a recession's coming. Everybody thinks a recession's coming now. But the markets are still more worried about inflation than recession at this point.
And so the biggest issue that we're all facing right now traces back to the fear-based overreaction of COVID. And so here we have the S&P 500, and we're picking this up from the last great financial crisis in 2008. And this is where the market crashed just over 50%. Now, from there, you'll notice this trading range, it had exceptional growth over the next few years. However, we're going to fast forward now and see if you can spot the big event that happened. So the big event that I'm talking about was this one right here. And you'll see that the stock market suddenly collapsed over 30% before the Fed had to jump in. And this is what Harry was talking about. We then created over $10 trillion of new money, which sent the stock market into this near vertical trajectory where everyone was making money in 2021. Now, if we take a quick look at the M2 money supply, can you spot that exact moment? So, relatively quite strong money growth, and then here it is right here. You can see just how much of a huge impact that COVID had on the economy and the creation of $10 trillion. So what's been happening over the past few months, especially this year, is that we're just coming down to more normal levels back into this trading range. And so how far could the stock market fall? Well, let's take a look at 3 key support levels. The first one in the near term would be this pre-COVID high, which sits at around about 3,400. Next, there's a lot of support around about this level, which is going to be the S&P around 3,000. But where is Harry Dent getting this 86% down from? Well, if we take a measurement from the absolute peak up here and measure 86%, which is around about here, he's basically saying that it's going back to the bottom of what happened in 2008. So as you can see, that would be one of the biggest crashes in history, but for me, I personally don't think it's that likely. But at least now you know where he's getting this 86% from. Okay, next up. Now, the biggest crashes in history never just happen in one big leg down. It typically happens in 3 to 4 cycles. So the question is, where are we right now, and how does Harry see the next 6 to 12 months playing out?
Stocks, remember, they've seen their first wave down. They bounced and retraced 50%, as I'm saying. Perfect first wave down. I would have liked to see it be a little more, 40% in the NASDAQ instead of 34. That's the lead dog here. But stocks do look like they've started their third wave down, and as soon as they break convincingly to new lows over the June lows, then we're going to be well into wave 3, and the stock market's going to be down 50 to 60% by early next year. And then people are going to know for sure that we are in the downturn, the crash of our lifetime, and it still will have another big wave at least to go down. 86% down on the S&P is what is my forecast for stocks, and 92% for the NASDAQ from their highs. Now, NASDAQ peaked in November 22nd, 2021, and the S&P January 4th. So
unfortunately, Harry does see a very bad 2023, 50 to 60% down early next year, and then ultimately down 86%. And so this would make it one of the biggest stock market crashes in history. And I don't think you're going to find anyone else with such an extreme crash prediction. It even makes Michael Burry seem tame in comparison. Okay, and to finish up, it's not all doom and gloom. The good news is that there is one asset class that Harry believes is going to outperform everything else over the next 6 to 12 months.
TLT is our prime place to be, and the least volatile as well, that rallies and does well in a worsening recession. Now, TLT peaked at 179.70, okay, all the way back in March 2020, in COVID time. This is when COVID was hitting, okay? And then it bounced again and went up to 155.12. So 155 in December, early December of 2021. It's been falling ever since. It broke my megaphone pattern, so that's what we're looking for. And this is a tough time. I think TLT is going to be a super buy again at 101, because remember, the target on the upside through the tops in the last several years is still 196. So number one, this is the most volatile time ever in Treasury bonds. There's not a time I can go back in history. This is the biggest fall from 180 down to 104-ish here and maybe as low as 101, probably likely ahead. And it'll be the biggest rally if we go from 101 or 104 here up to 196 in the next year and a half. And that's what the charts say. Now, charts aren't perfect, but that's my best bet. We'll never see a buying opportunity in the highest quality bonds, long-term bonds, 10 and 30 treasuries, ever again in your lifetime. There hasn't been one in the past, and there will not be one in the future. So, big opportunity.
Now, one of the biggest surprises for me this year has been the bond market. And bonds are meant to be the safe haven and protect investors from the volatility of the stock market, hence the 60-40 portfolio. However, check this out. At the time of this recording, the S&P 500 is now down 20% on the year. However, TLT, which is long-term government bonds, is down almost 30%, crashing harder than stocks, which is crazy. And this is why Harry believes a big reversal is coming to bonds. As the Fed jacks up interest rates, this is actually good for bonds. And as the bond yield rises, there'll be more and more big institutional investors being attracted by the higher yields. So there you are, guys. Hope you enjoyed. Now, Harry believes that the next 6 to 12 months in stocks is going to be the worst in our lifetime, and that the place to be is TLT. I will keep you updated, but for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does. And I'll see you in the next video. Bye for now.